Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. I hope everybody is doing great, feeling healthy and fine. So this is a new series that we have started on our Oliveboard channel regarding RBI Grade B 2022 examination. As you all know that the admit card of the examination are already out. So we have created a new series where we will be just doing a fast revision on this, and we will be just touching upon the things through which question can be asked, because as in the phase 1 examination you will be having options and you have to click on the options. Okay, so there is no detailed discussion or anything we are going to do. We will be just going on the topics and you will be seeing like what they can ask you in that examination. Okay, so this is the RBI Grade B 2022 Fast Track Revision Series for Phase 1. So it is only available in the Oliveboard, and we will be helping you out in finding out uh, during your preparation and during your revision where you should actually focus on. Okay. So guys, we are pledging for your success. We are just committing. We are providing you with corporate consistency, and later on we will celebrate all the things. What you will get over here is fast track crisp series, basic concept understanding, adaptiveness, and guidance. Everything you will get over here. And today we will be starting with general awareness portion, and today mostly we will be doing all the static part of it. Okay, static part means what are the various things related to RBI, important things that are happening in the RBI and all these things. So before starting of the session, if I so we have my old student over here, AFS. Good evening, good evening, good evening. Welcome to the session. Great to see you. Anybody else who is there, please you can say hi, hello to me if you wanted to. Okay, we have Sumit here. Anybody else? At least you can introduce yourself, guys. So this is for general awareness, but here today all the things will be very static in nature. Very static in nature, because from tomorrow we will be doing economic survey, then after that various schemes and various datas and all those things. Okay. Oh my god, Sumit is a big fan. My god. Shaurya, welcome man, welcome Shaurya. So we have fan following also over here. I am really touched because you have said. Oh my God, AFS! Oh, congratulations, congratulations! It's just really a very touching moment. I just, uh, I'm just not able to express like how I can say, like what I should say regarding this. Is really great, and congratulations for you. Okay, regarding SEBI written examination, congratulations. And we are also coming with one of the series where we will be starting with some of the things regarding interview. See, for May, the question paper has already been set. Okay, because they do not keep all the things regarding May. Okay, so even if you wanted to cover, you can cover till 10th of May. Okay, till 10th of May you can cover, because right now, if all over India exam is happening, so they prepare the question paper well beforehand they just prepare it. Okay, so they just do not wait till the end of the moment, then new questions or new question, nothing like that. Okay. Yes, interview tips will be there. So on that day I will be telling you like what interview, what you should tell, whatever. See, normally various type of general question are asked. Okay, but that depends on how you answer that. Okay, normally they just wanted to test over there, because they have tested knowledge has been already been tested over in the written examination, in the phase 1 examination, everywhere, right? But now they wanted to test you as a personality, how the personality as of you are. Normally they will ask very less technical question and more like your personality wise question, like how you answer that, how you will deal with the situation. So based on that we will be preparing one more series on that. So I hope everybody will be joining and everybody will be getting benefited out of it. Okay. Good, good, AFS. Very good. I'm really, really very happy today for you. Okay. So, guys, this is a very fast series, and here we are not going into any kind of deeper things. We just wanted to let you know that you just remember this thing from here. Okay. Only that thing. Right. Because options paper, phase one is optional. Option paper, like options you will be getting. Okay. Based on that, you have to click on which is correct, which is right. Hello, Mohit. So you should have some data in your mind. Okay, they will not argue some descriptive answer like please explain that or that. Okay, no, there is no explanation in the phase one examination. Everything is option. Answer is there. Okay. Yes, yes, yes. I am expecting Sumit. You also say something to me because I just wanted to hear, like AFS has said, I just wanted to hear the same thing from me also for any of the examination. Okay, really, really great. Yeah, very, very happy to know today. Like it's really a very, very proud moment for all of us and well wishes. So let's start with our general awareness. Most of the thing we will not call this at general awareness. It is just a static portion today. So we'll start with first of all, you should know foreign investment in India. What is the meaning of foreign investment? So in that, a foreign investment, we have two type of things: FDI and FFIs. Okay, FDI is something like you should know. It is like if any company is investing 10% or more into the equity paid up capital. Okay, and under the foreign institutional investment, it is less than 10%. Okay, so this different you should know. This value 10 you should know, because in the examination they will ask you what is the percentage criteria for FDI and FFI. So you should know that percentage criteria. Okay. Now, foreign investment can come from automatic route or government route. Okay, two types of there. Then foreign investment in India, some capital instruments are there permitted for receiving foreign investment. One is equity share, second is share warrant, third one is debentures, then fourth one is preference share. So these are the places from which foreign investment can come in India. Okay, then foreign investment in India are prohibited under any of the route for all these sectors. For all these sectors, the foreign investment is not allowed in India, like your atomic energy, gambling, betting, lotteries, chit funds, nidhi companies, agriculture, plantation activities. Okay, then housing and real estate, trading in TDRs, then cigar, cigarette, and all these things. Okay, then foreign investment in India. Who are the FFIs? Foreign institutional investor. They are pension funds, mutual funds, big funds are there. Okay, investment trust, banks, insurance companies. Then foreign central banks are there, foreign government agencies are there, sovereign wealth fund are there. Then after that, international multilateral organizational agencies are there. Then university funds are there, endowments are there, foundations are there, charitable trusts are there. So from all these places, FFIs can invest in India. Okay. Good evening, everybody. Good evening, Indu. Welcome to the session. Okay. Now, foreign currency account that is holded by resident individual. Like what kind of account the resident individual can hold in India. Okay, so the foreign currency account in an account held or maintained in a currency other than the currency of India or Nepal or Bhutan. Okay, so foreign currency account by resident individual. So what are the major foreign currency account that can be opened in India by a resident individual? So they are three: exchange earner foreign current EEFC, resident foreign currency domestic account, and resident foreign currency account RFC account are there. Okay, hello Yadav King ji, welcome to the session. Then after that, MSME, micro, small and medium. So you know the definition has been changed. The definition has been changed for MSME sector. Okay, so they have said that for the micro, if we say micro, in the machinery and equipment, they should not exceed 1 crore, and for the turnover, it is 5 crore, not exceeding 5 crore. Then for the small enterprises, machinery costing should not exceed 10 crore and your turnover does not exceed 50 crore. And for the medium enterprise, you should not exceed 50 crore in the machinery and not 250 crore in the turnover. So this is a new classification. Okay. Now, MSME sector like other services that are provided by the banks to the MSME sector. Some special facility is provided by MSME sector by the banks. They are Rural Self-Employment Training Institute, RSCTIs. Then financial literacy and consultancy support. These two things are provided by to MSME sector by the banks. Okay. No, dear, PDF will not be provided. You have to make, you have to learn from here only. Okay. Then priority sector lending guidelines. As you all know that government has prioritized various sectors. Okay. Government has prioritized various sectors. Like if you want, if government, if the bank has to provide loans, they have to provide to some priority sector. Okay. So priority sector means that those sector which government of India and the Reserve Bank of India consider important for the development of the basic needs of the country. They have been given priority over other sectors. Okay. So the categories of priority sector are agriculture, MSME sector, export credit, education, housing, social infrastructure, renewable energy, and others. So if any bank is giving loan to any of these sector, so bank has been given certain targets for year, like this much of priority sector lending you have to do per year. Okay. So here targets and sub target under priority sector lending. So one is domestic scheduled commercial bank, and a foreign bank which is having 20 branches and more. So they have to invest 40% of their net bank credit, adjusted net bank credit, that is ANBC, adjusted net bank credit. Okay, 40% of that. Okay. Then foreign bank with less than 20 branches. Okay, 40% of adjusted net bank credit, out of which 32% can be in the form of lending to the export and not less than 8% can be other priority sector lending. Okay, these figures are very important. For 20 branches, what they have to do. For 40 branches, for 40%, if they have less than 20 branches, how much they have to invest in which all places. So very important. They can ask as a very static question, because normally people keep on reading current affair, but they forget that there is some core concept is also there. Okay, so please make sure that your core concept are very clear. Okay, now then regional rural bank, RRBs. Regional rural bank, as the name suggests, rural. So we have to invest 75% of the adjusted net banking credit, okay, to these sectors. However, lending to medium enterprises, social infrastructure, and renewable energy shall be reckoned for priority sector achievement only up to 50%. Then a small finance bank. A small financing bank have to invest 75% of their adjusted net banking capital as computed in the para 6. So there is a para 6 in the CEOB, that is credit equivalent of balance sheet exposure. There is a whichever is higher. Okay, so for a small bank, a small finance bank and regional rural bank, the things are same, but for regional rural bank they have some issues with the medium enterprises, social infrastructure, and renewable energy. Okay, then partial credit guarantee scheme. So this is like a credit guarantee that has been given by the government of India only to the public sector banks. For what purpose? To purchase high rated pooled asset of the non-banking financial companies, housing companies, with an overall guarantee being limited to the first loss of up to 10% of being purchased by the bank under the scheme of or 10,000 crore, whichever is lower. Okay, so you should know that partial credit guarantee scheme is for which type of banks? Public sector banks. Okay, then compliance. There is a compliance officer, that is chief compliance officer. Okay, so recently RBI of India has released a notice on compliance function in the bank and the role of chief compliance officer, COO. Okay, so you should know all the technical aspect of that. Technical means you should not know what is the function and all those. No, the COO is required to have an overall experience of minimum 15 years, out of which minimum 5 years will be in the audit, finance, compliance, legal, risk management. And the tenure you should know that tenure has been fixed at minimum 3 years, not less than 3 years. Okay, then targeted long-term repo operation, TLTRO. TLTRO is a tool that let banks borrow 1 to 3 year fund from the central bank at a repo rate. by providing their government securities as a collateral. Okay, it is called targeted because central bank want bank opting for fund under this option to be specifically invested in investment grade corporate debt. Like if you really wanted to take that fund, you should invest that in the corporate debt. Okay, then banking ombudsman scheme 2006. What is that? So the banking ombudsman scheme is an expeditious and inexpensive forum for banking customers for resolution of the complaint relating to a certain services. So the banking ombudsman scheme is introduced under the section 35A. Remember that under which section it has been released, under section 35A of the Banking Regulation Act of 1949. This bank ombudsman scheme has been started. Okay, section 35A. Then prepaid payment instruments. What is PPI? Prepaid payment instrument is an instrument that facilitates purchase of goods and services, conduct of financial services, enable remittance facilities against the value stored in that. Okay, PPI can be issued by bank and non-banks. Banks can issue PPI after obtaining approval from the RBI. The non-bank PPI issuer are companies that are incorporated under the Companies Act of 56 and 2013. Okay. Now, NEFT system. So NEFT is a National Electronic Fund Transfer, is a nationwide centralized payment system. Everybody knows that. It is to carry out interbank fund transfer within India and from India to Nepal. Okay, here we have a Nepal also that is getting added. A person having no bank account can remit fund through NEFT. However, it has been restricted to a maximum of 50,000 per transaction. Okay, so if you do not have an account, bank account, and if you wanted to do NEFT, so you can give 50,000 as per transaction. So there is no limit imposed by the RBI for fund transfer to NEFT system. So NEFT system is available throughout the day, night, every time, 24/7 to 365 days basis. Okay. Then RTGS, real time gross settlement, RTGS system. NEFT people are always confused between NEFT and RTGS. So RTGS is real time gross settlement. Okay, which can be explained as a system which there is a continuous real-time settlement that is happening on of the fund transfer individually or transaction by transaction basis without netting. So RTGS system is primarily meant for large value transaction. Normally business people utilize this. So the minimum amount you can utilize in the RTGS is rupees 2 lakh with no upper or maximum ceiling, and it is also available 24/7 365 days. Okay, now card transaction. There are 4 type of card transaction in India: debit card, credit card, prepaid card, and electronic card. So a card can be swiped, that is a magnetic strip. They can be dipped. They can be put chip-based card are there, tapped, contactless, near-field communication, and point of sale terminal. Okay, so card present transaction, and card not present transaction. Like one time you can do transaction when the card is there with you, and another type of transaction you can do when you don't have the card. So the card present transaction is a card transaction that is carried out through physical presence of the card. It is known as face-to-face proximity. Okay, so it is like an ATM or point of sale machine. And card not present transaction does not require the card to be physically present at a point of transaction. It is also called remote transaction. So it is an example is an online transaction or a mobile banking transaction. You know, apps, we have all apps, right? For apps you do not require cards. Okay, you directly finger scan you do, and you open your bank app and you start doing transaction. Even during the type of internet transfer, you can also utilize that thing. But right now sometimes they ask you like grid, backside grid also. Like sometimes they ask you please enter the number in the grid. Okay, so during that time card should be present. Okay, okay. Now tokenization, card transaction. What is tokenization? Tokenization, it's like we are replacing the actual card details with an alternate code. Your card details will be removed and they will give you a alternate code. So alternate code is called token. Okay, it will be a very unique for you. Okay, that is entity which accept requests from the customer for tokenization of the card and devices. Okay, and the tokenized card transaction are considered safer. The reason is that because here people will not know who is having that token, what is the name of that, and we do not know what is that all about. You can call it as encryption because you do not know like to whom this belongs. Okay. Now, the Ombudsman Scheme for Digital Transaction 2019, in an expeditious and cost-free apex level mechanism introduction by the RBI for resolution of complaint regarding the digital transaction. Okay, undertaken by the customer system participation and defining the scheme. The scheme was introduced under Section 18 Payment and Settlement Act. Okay, please remember this. They will ask you sections. They will give you a question. The Ombudsman Scheme for Digital Transaction 2019 comes under which section of Payment and Settlement Act? They will give you Section 18, Section 19, Section 20, Section 21, whatever it is. Okay, so the answer is section 18. Okay, so this is kind of question which they normally ask. Okay, as you all know that in the previous year 2-year question paper, a lot of section have been asked, because right now they have to ask all these things. Okay, then what is Payment and Settlement System Act 2007? Payment and Settlement Act 2007 is provide for regulation, supervision of payment system in India and designate the Reserve Bank as an authority for the purpose of all related matters. So what are the regulation that has been made under the Payment and Settlement Act of 2007? Okay, so 2 regulation have been made. First is the Board for Regulation and Supervision of Payment and the Payment and Settlement System. So both the regulation came into force with that on 12th August 2008. Okay. Now, the Payment and Settlement Act of 2007 provides for regulation and supervision of payment system in India and designate the Reserve Bank of India as authority for the purpose. Under PSSS, so this we have already done. So PSS Act 2007 does not prohibit foreign entities. It does not prohibit foreign entities for operating a payment system in India. And the act does not discriminate different between foreign entity and a domestic entity. So it is like that if any foreign entity is there, they can come and open the Payment and Settlement System Act. Okay, they can operate a payment system in India. Okay, so this Payment Settlement and System Act does not prohibit foreign entity. Okay, then Retail Direct Scheme. So what is this Retail Direct Scheme is all about? So the Retail Direct Scheme is one-stop solution to facilitate investment in government security by individual investor. Individual. Okay. Under this, individual investor can open a gilt security account. Okay. That is also called Retail Direct Gilt account with the RBI. Using this account, retail investor can buy, sell government security through online RBI portal. Okay. Retail investor individual will have a facility to open and maintain the retail gilt account with the RBI. Okay, so it is for the individual investors. They can open an account with the RBI that is called as retail gilt direct gilt account. Okay. Now, government security. What are the various type of government securities that are there in India? So there are various type of government securities are there in India. One is treasury bill or T-bills. Cash management bills are there. Dated government securities are there. Stripes. Separate trading of registered interest and principal securities is there. Bond with call and put options. Inflated index bond IIBs are there. Fixed rate bond are there. Floating rate bond FRB are there. Sovereign gold bond SDGB are there. State development loan SDLs are there. So these are all the government securities that are there. Okay, please remember that these are very important. Now, sovereign gold bond scheme. Everybody knows regarding the sovereign gold bond scheme that has been launched by the government of India in November 2015. So it is issued by RBI on behalf of government of India, and it is denominated in the multiples of grams of gold. Here the basic unit they have taken as 1 gram. Please make sure that you know basic unit. At least 1 gram you have to buy. You have to take, and after that it is on the that level. So the tenure of the bond will be a period of 8 years. Like if you take a bond, it will be for 8 years. You will get the exit option at the 5th year, 6th year, 7th year. Okay. So till 5 year your money will be blocked. After that you have a exit option. Okay. So minimum permissible investment is 1 gram. The maximum limit for subscriber is 4 kg for individual, 4 kg for Hindu undivided family, and 20 kg for trust and similar entity per fiscal year. Per fiscal year means if any trust is buying the gold at 31st of March 2021, 20 kg, then on 1st April they can again take 20 kg of gold. Okay, so it is for per fiscal year 20 kg. Okay, notified by the government from time to time. The bond are held in the books in the demat form, dematerialized form, in the demat form. Okay, so that you do not lose the risk of losing a document. So it will be all in the demat form, like the shares are there. In the same way, you will have a gold bond. Okay, so then after that, inflation index national saving security, IINSSC, cumulative. So Reserve Bank of India has launched inflation index national saving security bond, which offers an investor a return of 1.5% more than inflation based. So this 1.5% is very important for your exam, because if they ask you question how much above the inflation rate IINSSC bond is giving, so you should say that it is 1.5%. They will give you option 1, 1.5, 2%, 1.75%. So answer will be 1.5%. Okay. So inflation rate will be based on the final combined consumer price index basis 2010. So there will be two part in the interest rate. One is fixed rate of 1.5% per annum, and the second is inflation rate. Okay, whatever the inflation, after that you are getting a fixed amount. For example, if the inflation rate during the 6 months is 5%, then the interest rate for these 6 months would be 5.75. That is fixed rate of minus 0.75 and inflation rate of minus 5. Okay, like for 6 months we are talking, because 1.5 extra you are getting for year, so that is 0.75 for half year, right? So that is why if inflation rate for 6 months is 5, then 5 plus 0.75. Okay, but if you are keeping it for 1 year, and if the inflation rate is 5%, then 5 plus 1.5, that is 6.5 you are getting as inflation. Okay, you got it? So this 1.5 is very important. Okay, now inflation indexed bond. Inflation indexed bond is a bond issued by RBI, which provides the investor a constant return irrespective of a level of inflation in the economy. Okay, the main objective of inflation index bond is to provide hedge and to safeguard the investor against the macroeconomic risk. Okay, then purchase of immovable property. What is this purchase of immovable property? According to the Section 4 of FEMA Act, Foreign Exchange Management Act, a person resident in India can hold, own, transfer or invest in any immovable property situated outside India if such property was acquired, held or owned by him or her, he or she was resident outside India, or inherited from a person residing outside India. Okay, so a resident individual can send a remittance under the liberalized remittance scheme LRS for purchasing immovable property outside India. In case members of the family pools their remittance to purchase property, then the said property should be in the name of all the members. Okay, it is not like that only a single member name will be there. So if the pool of family is taking that property, so everybody name should be written over there. Okay, now Asian Clearing Union. Asian Clearing Union is a payment arrangement whereby the participants settle payment for intra-regional transaction among the participation central bank and net multiracial basis. The foundation of Asian Clearing Union will headquarter at Tehran in Iran, and it was laid on December 9, 1974, but it started its operation in 1975. Okay. Then special non-resident rupee account. What is that special non-resident rupee account? So it is a current account. It is a current account opened by any person residing outside India having some sort of business interest in India. Okay, so they can open a special non-resident rupee account. Okay, account in India by non-resident. What type of non-resident India a non-resident India who can hold what kind of account. Okay, a non-resident Indian is a person resident outside India who is a citizen of India. A person of Indian origin is a person residing outside India who is a citizen of any country other than Bangladesh or Pakistan or such other country, or maybe specified by central government from time to time. Okay, so these are the account they can open in India. Okay, they can open, what are the major accounts that can be opened by India by non-resident? Non-residential external rupee account scheme, NRE account, foreign currency non-resident account, bank scheme, FCNR account, then non-resident ordinary rupee account scheme, NRO account. So these are the three accounts that can be opened by the non-resident people in India. Okay. Then Exchange Earner Foreign Currency Account, EEFC. It is an account maintained in foreign currency with an authorized dealer, that is called as AD also. That is a bank dealing in foreign exchange. It is a facility provided to the foreign exchange earner, including exporter, to credit 100% of their foreign exchange earning to this account, so that account holder do not have to convert the foreign exchange into rupee or vice versa. So it will help in minimizing the transaction cost. Okay, you can directly put all your money over here, so you do not have to convert the money from here and there. Okay, then Money Transfer Service Scheme, MTSS. MTSS is a way of transferring personal remittance from abroad to the beneficiaries in India. MTSS, like remittance, personal remittance. Okay, only inward personal remittance is into India is allowed. Okay, only inward personal remittance into India, such as remittance towards family maintenance and remittance favoring foreign tourists visiting India, are permissible under this. Okay, under this scheme. Okay, then money changing activities. What is that money changing activities? A money changer is a person or organization whose business is a exchange of coin or currency of one currency to that other. So in the airports or various other places, you can find these people. Okay, money changing business can be undertaken by entities authorized by the Reserve Bank. Under what section? Section 10. Under section 10 of the Reserve Bank, money changing activities can be done, and that too under Foreign Exchange Management Act. Sorry, it is a bank under the section 10 of Foreign Exchange Management Act, FEMA Act of 1999. No person shall carry on money changing business without the possession of valid license. So you should require a valid license from the RBI under the section 10 of FEMA Act. Then only you can work as a money changer. Okay. Then NBFC, peer-to-peer lending platform. What is NBFC, peer-to-peer lending platform? NBFC peer-to-peer, NBFC P2P is a type of NBFC which carries out business of providing services of loan facilitation to willing lenders and borrow through online platform. So okay, this type of NBFC is not allowed to accept deposited or lend its own. Okay, there you cannot allow to accept deposit, you cannot take the deposit, or you cannot lend your own. It is to moderate the interaction between lenders and borrower. So registrations are required under that. So under which company should be registered under the Company Act. Okay, and it should have a minimum net worth of 2 crore. So these are the things, very small things like net worth of the company, what should be there, under which section it is required. Okay, how much percentage wanted to invest, what they have to do. All these things can be asked in your MCQs. Okay. So, NBFC is a company registered under the Companies Act of 1956, engaged in a business of loan and advances, acquisition of shares, stocks, bond, debenture, security issued by the government or local authority or other marketable security like nature, leasing, hire purchase, insurance business. But it does not include any institution whose principal business is that of agriculture or industrial activity, or purchase or sale of any goods other than securities, or providing any service, sale, purchase of construction of immovable property. Okay, so different type of NBC. How many type of NBCs are there in India? First is asset finance companies are there, investment companies are there, loan companies are there, infrastructure finance companies are there, systematically important core investment companies are there, infrastructure debt funds are there, non-banking financial company microfinance institutes are there. These are very important. Non-banking financial companies factor companies are there, mortgage guarantee companies are there, NBFC non-operative financial holding companies are there. So these are all very important, very important. These are all type of NBCs. Okay, then what is NBFC microfinance institution? Very important. Non-banking financial company microfinance institution is a non-deposit taking financial company that has a minimum 85% of its assets in the nature of qualifying assets. The qualifying assets are those assets which have a substantial period of time to be ready for its intended use or sale. Okay, then what is the ombudsman scheme for NBFCs 2018? So there will be ombudsman scheme also. So NBFC ombudsman is a senior official that is appointed by RBI to redress the customer complaints against any NBFC for any kind of service issue or anything. Till date, 4 NBFC ombudsman offices are there in Chennai, Kolkata, New Delhi and Mumbai. So north, east, south, west, everywhere it is there. Okay. Then core investment company. What are core investment company? Core investment company are specialized NBFCs. Okay. Arti, just wait. Let me finish this. Then after that, I will answer that. Okay. Core investment companies. What are core investment companies? Core investment companies are specialized NBFCs that need to undergo NBFC registration. Okay, and they should have an asset size of rupees 100 crore or more, and they should carry a business of acquisition of shares and securities, but with certain conditions. Okay, then infrastructure debt fund. What are they? Okay, they are investment vehicles for channelizing investment into the infrastructure sector. Okay, they are sponsored by commercial bank and the NBFC, and they have to do maximum investment in the infrastructure sector. Okay, then infrastructure finance company, again they are another category of NBFC, or we can say it's a financial institute where the prime business is providing loan to the infrastructure companies. Okay, then trade receivable discounting system, TReds. TReds is an electronic platform for facilitating financing and discounting of trade receivable by MSME by various financiers. Okay, these receivables can be due for corporates and other buyers, including government department and PSUs. Okay, so these are all the things we have discussed today, guys. And tomorrow session is very important for because economic survey 1 and 2 both we will be talking, and I have created the content for that, and in that content very important points are there. I will let you know like what data just you have to remember. What data you have to remember. आरती सिंह सर फाइनेंशियल इंस्टीट्यूशंस की रिपोर्ट भी करा दीजिए. सी आरती, there are various type of financial institution. We have already covered all these things under our Bolt magazine. Okay, Bolt magazine. Please go there. Under that Bolt magazine, we have discussed various reports. And what is important in that report, you should know that. Do not never read the report to the fullest, because these reports run in hundreds of pages. Not necessary. It is not necessary to read full report. You should read only the briefing of the report. Very important data that report wanted to tell you about that. Okay, because if you start reading the full report, you will only be able to read one report in a single year. Okay, so we create a Bolt magazine. I think it is available free of cost. Please read that. Under that, whatever the things are coming, you will be getting in a proper day. Okay, see, for these 4 months, January to April, very important. Very, very important. January to April. But if you can cover, you can just add 10 days of May also. Okay, 10 to 15 days of May also. Okay, 10 to 15 days of May also you can cover. But current affair has to be prepared in a very, very smart way. Okay, today we have just discussed only the static part. Okay, tomorrow I will tell you like how we should take out the information from the economic survey. How we just take out the information from the economic survey. Okay, how easily you can just remember the things. Just that much is important, because whenever you see the question, automatically that will be coming in your mind. Okay, 7.5, 7.3, some topic is there. Okay, I have seen somewhere like that growth is 7.5. So whenever you see that option 7.5, you will automatically click that. Okay, so tomorrow I will be sharing that data with you in the 9 p.m. lecture again. So tomorrow economic survey we will be discussing. Okay, guys. I hope sure your answer is cleared, and Aarti, your answer is also get cleared, right? Anybody else wanted to tell us anything? Sure. Tomorrow, please be there. Okay. So this series will go till 25th. 25th, and we are covering all the things from January to April. We are covering very important things from January to April. Okay, so please be there every day 9 p.m. Please show your presence, and in single video you will get all the information which you are looking for revising on your own. Okay, that I will provide you over here only. Okay, just remember that you just have to just put an earphone and just sit down and just listen to what I am saying. Okay, thank you, Ravi. Thank you so much. Yes, sure. Please do attend, and I hope today the static part is over. Okay, so what exactly are from RBI things they can ask? They can normally ask under which section. Okay, like various type of percentage they can ask. Okay. How to prepare current affair? Are you asking how to prepare the current affair for the next year, or are you looking for like how you can prepare the current affair for within these 15 days? Huh? Not 15, even 10 days are there, right? Yes. I will tell you how to prepare the current affair. I will just right away tell. The main thing is that whenever you are preparing for current affair, always have a syllabus in your hand. Keep syllabus along the side. Keep the syllabus along the side. Okay, then only you can prepare the current affair. Okay. Whatever current affairs are there, we are already covering. We have already running various series. SBI is taken by some other teacher. Okay, so you can consult that teacher regarding the SBI current affair. I am here in the regulatory body. Okay, so I can tell you like regarding RBI, SEBI, and all those things. Okay, so if within 10 days, if you really wanted to focus, just focus on what I am teaching. Okay, that will give you much more weightage. Okay. You are getting difficult to manage time. See, 4 topics are there, right? You have a general awareness too, right? You have a reasoning, you have a aptitude, okay, and English. So right now, my main guidance to all of you is that please make sure that you are very good at the part which you think that you are very good at. Okay, like if you think that, see, 80 questions are there for general awareness. 80 questions are there for general awareness, and 60 are for reasoning, right? And 30 for English, and 30 for your that thing. Oh, the topic. Okay, so 80 questions and 60 questions. These are carrying the must weightage. Okay. General aptitude, sorry, general aptitude, yeah, G. Okay, so general awareness and reasoning are carrying much more marks. So try to maximize the marks over here. Yeah, quantitative, yes, it is quant. Okay, so try to maximize the marks in general awareness and reasoning. Okay, no, we call it as quantitative aptitude. Okay, it is called quantitative aptitude. Okay, so but 30 questions are there, but in all the four parts you have to clear the cutoff. Sectional cutoff is also there, right? So make sure that you clear all the sectional cutoff and try to focus on the area where you are more stronger at. So what I will tell you is, I will suggest that when you start your examination, please finish all the question in which you are 100% sure. Do not just leave it for somewhere. Okay, after that move on to the question where you are 75% sure. Then move on to the question where you are 50% sure. Okay, please do not attempt unnecessarily all the question. Do not attempt the question unnecessarily, because even if you are getting the clear cutoff, you are going above the cutoff, maybe because of negative marking you may lose marks. Okay, so make sure that where you are 100% sure, just try to make sure that you are attempting all those. Before starting of the question paper, just go through all the throughout the question paper and see that yes, this is the question which I have to attempt first. Okay, and start attempting it at the earliest. Okay, finish it off in the starting hour only. Okay, then you move on to the other section where you are a little bit unsure, and then you try to finish that. Okay. Yes, all exam has tough competition. Why we have to keep it tough only? It is not a question. See, these exam are not for selection. The exam are kept for rejection. Okay, now in this first phase we have rejected this much people. Okay, in the second phase we have rejected this much people. Now in interview we have rejected this much people. Okay, whatever is left, they are selected. Okay. So all examination are kept for rejection only. You have to make sure that you do not fall into that rejection criteria. Okay. And I always ask my student that better look for a question paper to be difficult. Because if the question paper comes difficult, then the cutoff will go down. Right? If the question paper comes difficult, then the cutoff will go down. Okay, so if you have a good preparation, then you will easily clear off the cutoff, right? So always expect that the question paper should come on a moderate to a difficult tone, because then it will be difficult for everybody. And if you have done a very good preparation, then the cutoff will be less and you can easily clear off the cutoff. Okay. Anybody, anything to ask? I need your Pune office contact number. So you can what happened? You can contact Oliveboard. No, you can contact if you wanted anything. You can just contact Oliveboard. And we cannot share our personalized details. Sorry, we never share our personalized details. Sorry. Anybody wanted to ask anything else regarding examination or anything? So before, we are running our early bird offer. Okay, so we are providing it for 3,999. Okay, ESI mock tests are there, very important mock tests are there. If you at that right now moment, if you really wanted to prepare in a proper way, please join any of the mock test. Right now, please attempt as many mock tests as you can, because that will give you a confidence and preparation properly, because that will help you in gauging in how much time you are attempting what kind of portion. So mock tests are very important. Okay, so mock test, please join it it is right now for 10 days. It is very important if you keep on attempting the mock test, because it will boost your confidence, because you will have a live situation that you will be facing on the final day of examination. Okay, you will get a live situation like you are attempting a mock test. Like a similar platform will be there and you are doing in the same scenario. Okay, and then you will feel more familiar with the scenario when you go and write the final examination, so you will not feel a very anxiety and all those things you will not feel. Okay, so all these things. So please, if you want it, please join our mock tests, because these are highly qualitative material. Mock tests are there. Oliveboard is known for the good quality mock test that we prepare. And yes, we prepare on a difficult tone. Okay. So please do join our mock tests. They are very important. And if you really wanted to boost your confidence and preparation, do join the mock test. Anybody else has any issue, anything they wanted to ask, they can ask right away, or we will just wind off the session. So thank you guys. It's really great to see you all. And tomorrow again at 9 p.m. we will be meeting with economic survey 1 and 2. Okay. Important data I am sharing tomorrow. Please do join that. Okay. So bye bye. Take care. Invest your 100% and please trust the process. You will be successful automatically. Just you have to trust, you have to invest your 100% and you have to trust in the process, but please invest your 100%. Okay, so thank you guys, really great to see you all. Tomorrow I will be waiting for you at 9 p.m. Thank you so much. Bye bye, take care and good night, and please follow all the COVID-19 protocols, because exam is nearby and I do not want anybody to get ill. Okay, high time, so please remain safe and sound. Okay, so take care. Bye bye, good night.